Good morning. Welcome to the XM.com weekly market update. With me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Let's get into these numbers. We'll touch on some of the Aussie statistics this morning. Consumer confidence came out late last week.
Yeah.
Minus 2.5%. They're looking at a positive 0.5% there, which, and looking at that chart going back a few years now,
Yep.
the impact of interest rates post-COVID clearly shows on the chart where there's a lot of uncertainty in the market.
Sure, absolutely right. Yeah, and you can't discount, the hurt on Main Street with high interest rates and that consumer confidence. And the other side, of course, is the Aussie dollar's had a little bit of a rally. Equity markets are still relatively hot compared to where they were going back a year. And the other side is that the overall momentum seems to be, whilst we're seeing a pullback, we've just got to see what happens as far as rate policy from central banks come third quarter.
Well, there's plenty of discussion on that as well. This negativity feeds into the building market as well. So there's been a lot of discussion in the Australian market, particularly a lot of builders have gone out of business.
Yes. Where do people live?
Well, who knows? Because obviously there's the rental crisis. There's this really aggressive immigration policy as well.
Yes.
Bringing in a lot of people from offshore, which adds to the stress, not only on the rental market, but on the new housing market as well.
100%.
And we look at the building permits there, the government would want those figures to be
around the other way.
Pretty much opposite, because they need a lot more housing.
Yes, they do. You'd want it at 14% considering the migration. And children also. You've got the next part of it. Families, they get to 20, 25 years of age. Where do I live? What do I do? I'm out of uni. So, yeah. Yeah,
it's pretty tough at the moment. Aussie dollar, it's holding up pretty well actually.
It's had a bounce.
Yeah, it certainly has. It was sort of heading back towards the 64 mark, but hanging around that 66 mark. I think with the current policy within Australia on interest rates, obviously steady as she goes. There's talk about potential cuts later in the year, but if anything, you would think it's quite a number of months away.
I think so. Yeah, we've just got, I think there's a couple of other markets that'll probably move before the Aussies. That would be, I would say, Canada and New Zealand possibly, and certain parts of Asia. And then what happens as far as Eurozone or the POMs, and what happens with the Fed. Yeah. And we're in an election year, and you're now less than 7 months out.
And the Eurozone and Canada, I think they've got the
meetings this week.
Yeah. Unlikely there would be a change.
That's right.
It's more around the commentary that comes on the back of those meetings.
Absolutely.
Over to the US, non-farm payrolls once again keeps on keeping on.
Wasn't it incredible? 303,000. It hit everyone. That's why you can't forecast those numbers. Everyone said I might hit 150, maybe possibly a 200, and it shot to the upside. 303,000. It's startling. Yeah. And if you're looking at that from a January perspective, it's very, very hot labour market.
Certainly is. So, and once again, it'll be interesting to see what happens in the next month. With earnings season starts again. Pretty much today.
Yes.
The banks
I was going to say, I thought it was about this time.
Tomorrow or something like that. Yeah. The banks obviously are first cab off the ranks. So some of the major banks come out later this week and then leading into next week before the big tech companies. But
yes, of course.
It'll be interesting to see how those earnings come in. US dollar or the dollar index.
Yeah, 104. 104.10. I mean, it's when you look at the chart, there has been movement, and it hasn't disappointed if you even look from the start of March. It was at 104, then it dipped to 102.60, then it's bounced back to 105, and now it's back at 104. So that's only in a 5-week window. There's incredible volatility across the currencies. And then if you go all the way back to the start of the year, we were at 101 in January, just after Christmas. So yeah, that's why it's the attraction. People love trading it.
That's right. That's what the traders want, volatility.
Yeah.
Speaking of which, the two big commodities which are the story at the moment, first of all, oil.
Yeah.
Heading northwards.
Yes, it's given up a little of that hot steam, but I've got to agree with you. It's been very dramatic, rally. And geopolitically, what's going on there, the Gaza situation, everyone's saying there's probably $10 to $15 worth of war premium built into price. And that hasn't been stripped out yet. You've had a couple of dollars as far as evaporation from a, possibly you could say, an overheated market. But she's a wild ride, the old crude oil market to trade. And I don't think that that's going to settle down anytime soon.
No, and we've seen, and you can see it on the chart there, it sort of heads towards that 90 mark.
Yeah, and bounces.
It seems to be a little bit of a ceiling at the moment, then comes off again.
That's right.
Time will tell if that happens.
If
once
it breaks
again.
it.
That's right. If it breaks it, I think we'll
Off
see
to the races.
shoot to the upside for sure. So,
Yeah. And if you roll geopolitics across from it, then it could be nearly a perfect storm.
Yeah, which is not going to be good for inflation.
No.
And finally, gold.
Wow. What do you say? Up 13% since the start of the year, Andrew. It's been on fire, and the last couple of, well, if you're looking at the start of April, it's just been one-way traffic, you know, given best part of $150 worth of move to the upside. Silver hasn't disappointed either. And central bank buying has been, we touched it last week. We said Turkey, India and China. Yep. China's daylight ahead, but just their consumption and buying. So everyone said 2,400 will probably happen in 24, yep. But boy, oh boy, it's no one probably expected it to hit it come possibly mid-April.
Yeah. And you sort of look back just to October last year. October, November was not just above 1,600, which is a huge increase.
Oh, yeah.
And I think that it's interesting. We spoke off air about when a market hits an all-time high, whether it's gold, the equity indices or whatever, hits
you think it's going to pull back, and all of a sudden it goes.
Yeah, and it's that fear of missing out as well, where everyone sort of comes in and thinks, wow, this is the place to be, and it just pushes it to another all-time high.
Yeah, I mean, the amount of stuff I read, you know, Chinese consumers are buying gold at a voracious appetite. India, the same, you know, big consumption. You're talking a couple of billion people across Asia. Yeah. And, you know, you spend a lot of time up there. The attraction to gold in Singapore is pretty hot, isn't it?
Wow.
And then you go to Dubai or you go to Shanghai or go to Mumbai. It's like, wow.
Yeah, it never loses its luster, does it?
No, it doesn't. It doesn't. And, you know, I spoke on CNBC the other day, and they said, you know, where are you thinking? I think probably 2,500. It's too hard to forecast how far out you can go, because we got I think a lot of turmoil over the next 7 months leading into an election. You've got interest rate policy, geopolitics, what happens as far as gold, US dollar, central banks, man, that's and equity markets fully priced. Yeah.
Plenty going on in the markets. They never disappoint, do they?
They sure don't. I look forward to this, because that's why, you know, we do this weekly, and nothing surprises.
That's right. Plenty going on, but we'll keep an eye on these rate policies out of Canada and the Eurozone this week, and also
New Zealand too, the Kiwis. New Zealand,
and the first batch of earning results in the US.
Yeah. What do you think?
Well, the market has been saying we've been saying for 18 months or 2 years now, they're going to stop.
Yeah.
And pretty much everyone's been wrong the whole time. So,
100%.
But when you look at the US economy, which is still very strong,
yes, and
the employment numbers are strong, their GDP numbers are strong,
yes,
you would assume that the earnings are going to be pretty good again.
Yeah, well, we'll just have to wait and see.
Yeah, but it's always...
I'm erring on your side. I think that could be I think there's further rally to the upside for equities over the next couple of months.
Yeah, and historically, you can sort of say the S&P and the Nasdaq was hot last year.
Yeah.
But there's been plenty of consecutive years, not just 1 or 2 years. You can get a hot equity market for 3, 4, 5 years.
That's right, a rolling bull market.
And it just goes on. So, you know, some of these big investors, they say, don't bet against the American consumer.
Yes,
so,
or the Fed.
Or the Fed. So, but time will tell. We'll keep an eye on that and regroup next week.
Look forward to it.
Great.
See you then.
Okay, cheers. And that's the XM.com weekly market update.